Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're also going to be talking about Bitcoin's declining volatility and Bitcoin's declining volume and how it relates to this long-term downtrending curve that we see here representing Bitcoin's price action, because I believe all three of these things have major implications for the long-term technical analysis of Bitcoin that we've largely been overlooking. Now, I have touched on this in a couple of other videos, but we're going to be doing a dedicated video on it in today's video because I do believe this is extremely important for predicting where Bitcoin will be going over the next 6 months or so, as I believe this bear market is coming to a close. So without much further ado, let's go ahead and get right into it. Before we get into it, we'll go ahead and do some short-term technical analysis on Bitcoin because this is going to be important to my point a little bit later. What we saw Bitcoin do over the last couple of days is Bitcoin was trading up here around $6,600 right up here before we broke a little bit of a shorter-term uptrend than the one I'm about to show you right there. Let's go ahead and change that color back. Right there, we saw Bitcoin break this uptrend and fall down here to this uptrend. And this is a very important uptrend because this uptrend represents the pattern that Bitcoin has been making where it sets consecutive higher lows over the last 2 or 3 months or so. There's nothing new there. We've talked about that several times. But what is new here is the fact that Bitcoin has, surprisingly enough, not managed to break this uptrend. And like I said, I'm rolling this back over into the main point of today's video because this is important. What is interesting to me is that the bears were strong enough to break this uptrend of support after testing it 5 or 6 times. We had to come down here and test it over and over and over and over and over again before we finally got below it, and now we're not even able to get above this downtrend of resistance, this uptrend of support, not downtrend of resistance. We're not even able to get below that. Now, it's very possible that we do go below it in a little while, but for right now, it seems like we're seeing some kind of bounce here, but for the time being, it doesn't seem like it's even possible for us to get below it. So if we can't get below this uptrend of support, how in the world are we ever going to break below $6,000, guys? Think about that. $6,000 has been our low for the last 8 or 9 months. We set that low in motion back over here on February the 6th when Bitcoin, at the beginning of the bear market, that's important, at the beginning of the bear market, set our permanent low in, at least for the time being permanent low in, at $6,000 back over here on February the 6th. Why haven't we gone below it yet? And also, if we can't get below that uptrend of support, how are we ever going to go below it in the future if we don't even have enough strength from the bears to push us below this uptrend of support, let alone the most powerful indicator, the most powerful level of support in all of Bitcoin technical analysis? That's laying the foundation for what we're going to be talking about in today's video. The next thing that we want to talk about is something on CoinMarketCap. Now, I'm not going to be doing an entire crypto market recap right now because there's really not a lot to talk about in the altcoin markets, but this number right here is interesting to me, because we saw Bitcoin's daily volume jump up to around $5 billion a couple of days ago. If we turn on the daily volume candles over here, what we'll see is that when Bitcoin broke this uptrend of support, what we saw is that Bitcoin's daily volume spiked and climaxed, as you would expect it would. That was the first major move that we had seen out of Bitcoin in quite some time. And the couple of days after that, the volume went straight back down to zero, basically. We saw a $5 billion volume day here. And now we're seeing $3 billion volume days here again, guys. $3 billion volume days, you would have seen that in 4 or 5 hours back over here at the climax of the bull market over here in December and November. Those were very, very low volume days, and that really comes to light when you come out here to the weekly chart and the monthly chart and we start looking at the volume candles for this Bitcoin bear market. Look at how much the Bitcoin volume has been tapering off here in 2018. Look at that. That's striking. It's even more obvious if you come out here to the monthly chart. Let's look at the volume candlesticks on the monthly chart. Look at that. Now, of course, you have to disregard October because we're only 14 days into October, but look at how steep that kind of downtrend right here on the volume has been. We've seen volume tapering off and off and off and off for the entirety of the year, and that's not all, because if we come back out to the weekly chart, the next thing that we want to talk about comes into effect also. Not only have we seen volume dropping off in a major way, we've also seen volatility dropping off in a major way. And one of the best ways to look at volatility is through the Bollinger Bands. That's why I'm such a big fan of the Bollinger Bands, and this is one of the greatest ways to look at it. And as you can see, the Bollinger Bands, the outside bands have been constricting in here, which means that the volatility of the cryptocurrency market, or in this case, the Bitcoin market, has been lowering. We've seen a lot less price movement. We've seen a lot less, we've seen much lower gains and also much lower losses as Bitcoin's price action kind of curves in here and consolidates and builds a lot of tension as we come into the end of this descending triangle pattern. And that's very important. That's extremely important. And that's the signal that we're talking about here today, is that Bitcoin's volume has been dropping off and Bitcoin's volatility has been dropping off. Now, why is that significant? Well, let me go ahead and go back to this kind of, this curving downtrend, if you will, that I drew earlier on in the video, or actually before the video. This kind of yellowish line right here, that might be green, I don't know, I'm colorblind, you get a fun fact about me. Anyway, this represents a very important trend in Bitcoin as well, and that is that Bitcoin lost most of its had most of its volatility and lost most of its price action and most of the November and December gains back over here in just January, in the first week of February. We were trading on December 16th and 17th up around $20,000, and by February the 6th, we were trading at $6,000. We lost most of our valuation in the first 45 days of the bear market, and from there, the rallies have been getting smaller, and so too have the downtrends been getting smaller. Volatility has been dropping off. As we can see, this first major rally right here was about a 100% rally. The next one was nowhere near that large. If we look at this one, the rally was only about 45 to 50%. If we come over to the next one, we saw a little bit kind of comparable, about 45%. But lately, the rallies have been getting much, much, much smaller. This rally over here was tiny. This was about 25%, not even that. And we didn't even see a rally in the last couple of days. What we're seeing is we're seeing market structure of the rally downtrend cycle being broken. But we're also seeing not only the volatility, not only the volume drop off, we're also seeing the amount of gains and the amount of losses you lose that you have continue to decline. The rallies have continued to get smaller, which ties into that lower volatility thing. So what does all this mean? Well, this all ties back into one core concept about bull and bear markets, because we are very obviously in a bear market right now. This ties into one core concept, and that is that most of the time what you see in bull markets is that a bull market will end with a roar and bear markets will end with a whimper. Let me say that again. That's a very important piece. I want you guys to understand how important that is to your trading philosophy. Bull markets will almost always end with a roar, and bear markets will almost always end with a whimper. Now, let me explain what that means. Most of the time, what you see happen at the end of a bull market, we can look back at 2014 to see this. You can look back at bull markets in stock markets and precious metal markets. A lot of times what you see is that the volatility, the volume, and the amount of gains and also losses that you can make at the end of a bull market are exponentially higher than the ones you would see at the end of a bear market. Let's look back over here. This bull market, you could almost argue, was about 2 months long back over here in 2014. We saw from October to right around halfway through December, actually, in the same way we saw here. Excuse me, this was actually in 2014 bear market, of course. Back over here in 2013, we saw a major gain right here. And this rally, you could say this bull market had kind of started back here, although it's not really, we didn't really have a lot of good market structure back then as we do now to look at. But anyway, as we saw this bull market coming to an end, we saw the volatility just continue to rise. And we saw a major rally here at the end of the bull market. We saw a lot more volatility come back in, and that's exactly what we saw in 2017, because what you see in bull markets and bear markets, and this is something we discuss at length in the course. If you guys are interested in me going into a lot more detail on bull and bear markets, there's a link to join the Cryptocurrency Technical Analysis Academy in the description. But one thing that you see a lot of times in bull markets is that at the end of the bull market, the longer the bull market goes on, the more people are more comfortable getting in on the bull market. You get more, I don't want to call them stupid investors, but you get more noobs getting into the cryptocurrency space. You see a lot more people that aren't as experienced getting in, trying to get rich quick. You guys know that I've said before that here on the last month or so of the 2017 bull run, from about the 13th of November when we pulled back to $5,400 over here up to $20,000, was parabolic. It was exponential. We saw massive gains that we really had no business seeing. People were buying Lamborghinis, popping champagne corks, doing things that I can't say on YouTube or I'll get demonetized, because they were so happy that they were making so much money. Everybody thought they could get rich quick. And of course, guys, that's not how markets work, or at least markets don't work that way for very long, because like I said, what you normally see is that bull markets end in a roar and bear markets end in a whimper. And of course, when you see that insane volatility, those massive gains, those pump and dump figures almost, if Bitcoin wasn't a multi-$100 billion market at this point, what you see is that when you start seeing those massive roaring gains come in, you're probably pretty close to the end of the bull market. And that's why if you come back here and you look at the rallies and the downtrends, they continue to get more and more volatile, and we saw the volume continue to pick up over the 2016 and 2017 bull market, because that's what happens in a bull market, guys. And I'm tying this back into what we're looking at now, but go ahead and go with me here for a second. As we can see here, from about halfway through 2016 all the way up until the climax of the 2017 bull run, we saw volatility continuing to increase, and volume is a good good example of that. We saw volume continuing to go up. We saw volatility continuing to increase. If we turn our Bollinger Bands on here, by a massive margin, as you can see, Bollinger Bands got really, really wide out here because the market went absolutely parabolic. So why is this important and what does this tie into? Well, a lot of times what you'll see in markets is that a lot of things operate as two sides of the same coin. You see that with support and resistance. Most things that are true for support are also true for resistance, and also the same thing is true when you look at bull and bear markets. Most things that are true for bull markets are the same but inverse for bear markets, and when you see a bull market end, it normally ends with a ton of volatility, a lot of volume, a lot of interest from the mainstream media. You see a lot of people that don't really know what they're doing getting in on the market, trying to make an infinite amount of money, trying to get rich quick, and asking when Lambo. Of course, we all want our Lambo, but that's not really the way to go about it. But my point is, a bear market is basically exactly the opposite. You see declining volatility, you see declining volume, you see people leaving the space rather than entering the space. You see people being much more fiscally conservative with their funds rather than going out and buying multi-million-dollar mansions because they just became rich overnight. You don't really see that stuff happening in a bear market. And the most important thing that you see in a bear market is that volatility decreases and volume declines, and when the bear market ends, you see it ended in a whimper and not in a roar like you see a bull market end. And what are we looking at right now, guys? We're looking at extremely low volatility. We're looking at extremely low volume, unprecedentedly low volume for over a year. We have not seen volume stay this low for a very long time. I've been doing the crypto market recap at the beginning of the videos for months now, and normally Bitcoin's volume used to be around $5.5 billion a day. Then it started going down to around $5 billion a day. Then it started going down to around $4.5 billion a day. Lately, it's been around $3.5 billion a day, and it continues to decline, and that's not going to happen forever, guys. Because let me tell you something, Bitcoin may be in a bear market right now. Cryptocurrency may be in a bear market right now. This bear market may last the next 5 years. I have no way of knowing for 100% certainty, and by the way, nor does any human being on this planet. But the point is, that's not going to last forever, because what created the 2016 and 2017 bull market is still there. The fundamentals, the libertarians in the cryptocurrency space that really don't like the traditional financial systems, they don't like banks, they don't like the governments having their own sovereign currency, they don't like all the things that we don't like about the traditional financial system. All of the things that made Bitcoin go on a bull run in 2017 are still there. And guess what? They're even stronger than they were when we went on the 2017 bull run, guys. I've drawn this chart 100 times. Price action is going down. Fundamentals are going up. This area right here is going to be filled at one point or another, and that point is in the future. And what we're looking at now is that all the signs that I can see are pointing towards the end of the bull market, or excuse me, the end of the bear market and the beginning of either a bull market coming over the next 2 to 3 to 4 or 5, 6 months, somewhere around there, or the beginning of a new accumulation phase where volatility is very low and we sit around the same price level for the next 3 to 4 months. Either way, I'll take that, because if Bitcoin stays above $6,000, that gives us one of the strongest levels of support in all of Bitcoin technical analysis for the long term and provides a safety net if we ever have to come back down this far again. I think we've seen the vast majority of the actual bearish volatility come and go here in 2018, and I think most of the bear market is now over, and I do think that since Bitcoin can't even get below this simple uptrend that we talked about at the beginning of the video, how strong are the bears really, guys? I've talked about this before. How strong really are the bears? If the bears can't push us below this uptrend of support, and I may be wrong, maybe they do in the next 24 hours, maybe they do in the next week, who knows? For the time being anyway, it looks like they're having a little trouble pushing us below such a meaningless level of support, this meaningless uptrend in the grand scheme of things. So how are they going to push us below $6,000 that has held for the entire year? Ponder that. And tell me in the comment section down below what your pondering yields, because I love hearing your opinions in the comment section down below, guys. Tell me in the comment section down below what you think of this video. I think the bear market's wrapping up. I think it's mostly over, and I think that we're going to see either a new accumulation phase leading into the rest of the year on into the beginning of the year, or a potential new bull market starting in the next 3, 4, 5, 6 months, somewhere around there. Like I said, fundamentals always improving. Technicals are always actually looking a little bit better, in my opinion. They're looking much better now than they were 6 months ago. And also, the interest in the space has continued to decline, which is obviously a bullish contrarian signal, at least in my opinion. Like I said, tell me in the comment section down below what you think about that. If you guys are interested in learning more about how I do Bitcoin and cryptocurrency technical analysis, that is why I created the Cryptocurrency Technical Analysis Academy. If you guys want to know everything that's in the course, we have over 5 hours of content. You can click the link in the description and see what we offer over there. I teach most of what I know about cryptocurrency technical analysis, and the rest of it is coming in new videos that will be rolled out to people that are already in the academy, starting, well, now actually. I'm already working on new videos for the course. I just released 3 just last week. But anyway, guys, that's going to do it for this video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.